When will this reaccumulation range end? Because we know we are in the post-halving reaccumulation phase of the cycle. We've seen this in the past in 2020, as we can see here on this chart, but also in 2016. And in fact, we've seen lots of similarities with 2016 and 2024. So we'll be talking about that in a lot more detail. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So historically, if we look at the halving as a reference point and just look at when Bitcoin tends to break out from its reaccumulation range, in 2020, that was 160 days. So essentially we were just consolidating within this macro range for over 150 days, multiple months here, divided into two separate ranges. Although if you just look at, for example, this range high here, that was actually acting as the range low in that future range. So essentially we saw a range develop and then a new range form on top of this range. So two micro ranges developing into one macro range, which lasted over 160 days. 2016, 150 days long is how much we had to wait for a reaccumulation range breakout. And in fact, this saw a breakout and then a pullback into the top of that reaccumulation range high to turn it into a new support so as to enable a rally towards the upside. And this is something that also happened in 2020, mind you, because when we broke out from here, we also retested the top of that reaccumulation range and then rallied higher, but we didn't retest it on the breakout from the second range. So essentially, this first range saw a retest, but the second range didn't see a retest. So in 2016, we did see a retest and one retest in 2020 essentially, but both of them lasted 150 days, roughly speaking. So if we were to exactly see 150 days get reproduced here in this cycle, then we'd see a September breakout. But that's a long time, isn't it? It's going to be a bit of waiting. We are only 4 weeks, not even 4 weeks, 3.5 weeks into the post-halving period. We've only just cleared this 3-week window that is the post-halving danger zone. Check out that video if you haven't already. We've only just cleared this really important time window, because this is where we tend to see downside wicking. We've cleared it. We've been able to protect the bottom of this reaccumulation range, very similar to what we saw in 2016. So now that we're 3.5 weeks ahead past the halving, now we just need to be patient for the remainder of this range to develop. So essentially, this is what we're waiting for. We're waiting for time-based capitulation to set in, for people to really lose their nerve, get disappointed in the post-halving price behavior while we consolidate from 60k to 70k. We're just going to be meandering here for the next multiple weeks. So this post-halving period here is, or at least this entire reaccumulation range, this is what's slowing down the rate of acceleration in this current cycle. The fact that we've been consolidating here for 2 months has slowed down the rate of acceleration in this cycle from 260 days to 200 days. So that's great news, but we still need 200 days more for us to resynchronize with historical cycles. So if this range continues to go on for up to 150 days, probably less, we're going to resynchronize with the halving cycle a bit more, but not exactly. So a rate of acceleration of maybe 2 months, a month and a half would still remain, but nonetheless, this is really healthy for the cycle in terms of resynchronization and reducing the rate of acceleration in this current cycle. But also, this is really healthy because we tend to see this sort of healthy price behavior in the post-halving period take place. We've seen it in 2016 and 2020. Sideways reaccumulation is the name of the game, and it's part of the process. And it's not just after the halving, it's also around old all-time highs. These green circles just showcase to us how these reaccumulation periods can sometimes be short, as we saw in 2013. Sometimes they can be a little bit longer, but still quite short. Sometimes they can be extended and very volatile. And sometimes they can just be very sideways and just seeing not much volatility in the same way we saw in 2017. This is really volatile, zigzagging price action. Here we're just moving sideways. And whatever volatility, whatever sideways range you see, whether it's short or longer, the key thing here is not to be shaken out, because whatever dips we do see, if we just try and magnify this, the dip into 56k is very small if you zoom out, and the panic that downside wick generated is probably the same panic that downside wick generated right over here. But we don't really remember that downside wick when price then goes and does something like this. So really important to keep perspective and understand that this dip isn't going to be remembered, but the bull run and the parabolic phase that occur afterwards, that's what's going to be remembered. And so we have lots to look forward to in terms of this parabolic phase of the cycle. But it's first the reaccumulation range that needs to prepare us for that. Propelling into the parabolic phase of the cycle, this reaccumulation range then saw price expansion towards the upside. This reaccumulation range, which was more volatile, also experienced price expansion towards the upside. And here as well, price expansion towards the upside. And just notice how when we expand towards the upside, we still see pullbacks. Whenever we expand towards the upside, we see pullbacks. These pullbacks are simply part of the process. So even if you survive this reaccumulation range, note that we'll see price expansion, but we'll still see a corrective period later on. So it shouldn't catch you by surprise. And so this also shouldn't catch you by surprise, because we tend to see reaccumulation ranges form after the halving, but also in the post-halving period. And or at least around old all-time highs. I repeated the same thing in a different way. So around old all-time highs and around the post-halving period is when we tend to see reaccumulation take place. And this orange circle is a great illustration around the halving event, where we tend to see some sort of downside volatility. We tend to see some sort of sideways price action. We tend to see not much really going on around the halving event itself and after the halving event itself. But I think if we expand our time horizon, so if we just focus on this time horizon, if we just expand that time horizon to a few more months after the halving, we come up with a very different result. So instead of zooming in on this orange circle and being mad about returns not occurring, if we just zoom out and expand our time horizon, then we can get really optimistic about what comes next. And what comes next is the parabolic phase of the cycle, which is going to be occurring in the multiple months after the halving. And how many months can we prepare for? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and so on. So it just looks like 20 months after the halving. And notice how this is pretty much a mirror image of itself, right? So if we were to just do this and measure this, so from the halving to the top of the cycle, if we just do this here, then we get that pretty bang on. It's amazing to see the cyclicality and the mirroring, but we have to also appreciate that this cycle was only a month longer. So if we talk about rate of acceleration in cycles, you can see that this cycle was 1 month longer than this cycle, right? So rate of acceleration is natural in these cycles, but if we're already accelerating by 200 days, that acceleration, of course, is abnormal and unnatural. So the longer we consolidate here, the more we can rally and for longer later on in the cycle. So it's really healthy and really good for this price action and for Bitcoin for it to continue for a little while longer. And maybe that's not something that people want to hear, because they would like things to progress immediately towards the upside. But because we've seen multiple months of upside going into the halving, something we've never really seen before. So if we just look at this in the pre-halving period, you can see that we were actually downtrending and crashing at this same analogous time in the halving history of 2020. And in 2016, we saw actually reaccumulation, then a breakout, which was limited and didn't occur for as long as we saw here. This was a complete different experience than this experience and this experience. So I think this being the best experience of all time for investors in the pre-halving period, we should be grateful for it, but also appreciative of the fact that maybe we need to slow down a bit in this cycle for us to catch a breather in preparation for this part of the cycle, because this part of the cycle doesn't occur without this part of the cycle. This part of the cycle enables this part of the cycle. So this portion where we are right now, that's inevitably going to enable the next parabolic phase in the cycle. So as long as this continues, and I hope it continues for a longer time, that's going to be really positive and it's going to play out very positively into the next parabolic uptrend that lays ahead in the coming months. Thank you so much for watching this video. Subscribe to the channel for more videos I'd like to see in the future. Like this video if you enjoy content like this going forward. Check out the top right hand corner video for more, and I'll speak to you in the next one. Speak to you soon.